Hello, welcome to today's review of the True Potential portfolios. My name is Chris Leyland. I'm the Deputy Chief Investment Officer here at True Potential. Before I go any further though, I'd like to wish you a happy and prosperous 2018, so Happy New Year. The format for today is that I'm going to spend the next few minutes talking about our flagship investment product, that is the True Potential portfolio range. So first, let's start by discussing the performance of the portfolios. We'll then look at what are the key themes we're seeing from our fund manager partners, and finally discuss what changes have been made over the month to the portfolios. Okay, starting off with performance, looking at the month of December, all the portfolios have produced positive returns, and for the full year, returns are excellent, reaching nearly 14%. And this is a result here at True Potential we're incredibly proud of. Over the month, both equities and bonds have been strong, with the UK performing particularly well as we start to make progress through Brexit. Moving on to the performance of the underlying funds that make up the portfolios, the True Potential SCI fund range produced some good numbers, with their fund manager selection benefiting from taking a broadly diversified approach and their factor-based UK exposure working well. The True Potential Allianz fund range also produced healthy returns, particularly at the lower risk end, with the higher overall risk positioning working well in what's been strong markets. Looking at the key themes, which we formulate after speaking to our fund manager partners, our managers have continued to remain positive on the economic outlook. There's a general recognition that we're late cycle, but this viewpoint is not particularly well defined or even indeed quantified. The general opinion appears to be that economic growth will continue next year and could be higher than anticipated if we see positive results from the implementation of the US tax cuts. With interest rates edging ever higher, our managers are more positive on equities than bonds, with a feeling that equity markets can withstand the rise in US bond yields. At a level up to 3% on the US 10-year bond, they see this as a Goldilocks environment with decent growth, modest inflation and benign interest rates. So looking at the changes we've made over the month, the changes are specifically for the True Potential Balanced portfolio. And what we've done is we've switched the holding of Goldman Sachs Dynamic, that's been sold completely, and been replaced by the True Potential Goldman Sachs Balanced Fund. The True Potential Fund evolves forward from the original Goldman's Fund, offering institutional advanced thinking, normally only used for large company pension schemes, and offering this to the smallest retail client. The fund offers true diversification, with the ability to hold assets that are uncorrelated to equity markets. For the rest of the portfolios, no changes have been made, with the four optimization factors of risk, cost, expected return, and risk-adjusted return always being paramount. In conclusion, if we think back, so 2016, 2017, markets have been incredibly resilient in the face of many uncertain events. There'll always be uncertainty for investors, but the key is to hold a diversified portfolio, not just relying on one single asset class, geography, or style. The True Potential portfolios offer all of this, something we feel is essential in changing markets. Okay, thank you very much for listening today, and I will speak to you next time. Thank you.